Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, in early December, a housing affordability event was held in Toronto, which Evan Siddle of CMHC attended and spoke at. He said the following: in our view, much greater densification is essential to solving housing affordability challenges in supply-constrained markets. Is the CMHC correct when housing challenges can be solved by greater densification?
Never. It's just a crazy comment. Densification. So densification basically means that your city is getting higher, taller. Your city's getting taller. There is no city in the world, no tall city in the world, where housing prices have become, or housing has become more affordable by putting buildings as high into the clouds as you could put them. Densification naturally decreases affordability, or in other words, densification causes cities to become less affordable. The insanity of the leader of Central Mortgage and Housing Corporation making that statement cannot be understated, Jim. I cannot understate how bad of a comment that is. Greater densification is essential in solving housing affordability. If there was a single place in the world, a single major city in a capitalist country, where the city getting denser and denser and denser led to houses becoming more affordable, I will eat this phone that I'm speaking with you over today. It does not exist. Densification basically means that you're going to increase the value of land. Cities have a constrained amount of land that is ceded to them, to the city. It's in their geographical makeup. If you increase the value of land, inevitably that leads to higher housing costs, whether it be rental housing costs, homeownership housing costs, or subsidized housing costs. There is no difference to any of those costs other than they're going to go higher and higher and higher the higher your city is. We've often believed, Jim, we don't have the data for this, although it's available on a limited basis for some cities, that if we could calculate the minimum number of square feet needed, or how many square inches of land is required per square foot of building, we probably could figure out an affordability index or metric across every capitalist country in the world. We do not believe it would be that different, because the more square feet that you can put on a square inch of land, the more unaffordable that land is going to become. There is this myth that if we build an extra 2 floors on a building, that's going to, the builder or developer can then offer the units at a lower price because their profit margins decrease or don't have to be as high. Well, that's only true for that one particular building. But what that one change causes is that all surrounding land immediately increases in value because the amount of profit you can generate per square foot of land increases. So these are all one-offs. For one single building or one short a time period, say a city changes the rules and it gives them 3 months, that may hold off lessening of affordability or increasing of affordability. But immediately upon the next building being built or even being contemplated being built, that gain is gone. The widest, the broadest, and lowest cities in the world are the most affordable. I mean, you can go to Las Vegas in the United States and you can find extremely affordable homes. You can find expensive homes and affordable homes. The reason for that is because they continue to expand the city even though they have their water constraints. The city of Toronto, it has constrained land. Vancouver even more so. Vancouver's the most constrained building envelope in the entire country of Canada, probably North America, unless we've got, I guess arguably you could say Victoria is the same way, but Victoria has a limited growth potential anyways. But a place like Vancouver, where the only place you can really build is up, or you can cut lots in half, put 2 houses on a single detached house, all you're doing is increasing the land values. As land values increase, affordability decreases. It is a 1-to-1 relationship. Well, it's not actually 1-to-1, it's about 3-to-1. And what Mr. Siddell said at whatever this event he was speaking at is simply nonsense. And it only goes to the heart of the reason we're in the situation that we're in today. Myths are believed to be facts. Politicians believe these myths as facts and act upon them. All they're doing is further destroying the ability of the housing stock to grow at a rapid enough rate to offset an affordability problem. It is simply a housing stock created phenomenon where the move to densification is offsetting the benefits of a growing housing supply, because you're continuing to decrease or increase the value of the land. The broader a city is, the further it spreads out, the lower the land costs are. Anybody who questions that only needs to look over in Calgary, where you can buy a brand new single detached home of 1,600 square feet for $370,000. The only difference between Calgary and Vancouver is the price of land. Densification causes homes to be unaffordable.
We'll have more with Ross Kay right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Ross Kay. Ross, condo insurance is increasing rapidly in parts of Canada as property taxes continue to rise at the same time. A listener asked, will this impact condo prices in the near future?
Okay, so in the near future, meaning this spring for the sake of the argument, there are no changes that can be made that impact housing prices over a 30 or 60 or a 90-day window, other than house price illusion. Over the long haul, that's a different story. And to us, over the long haul is 8 to 12 months out. And this is something that I think your listeners can understand. If you have to spend an extra $50 a month on insurance for your condo and higher property taxes for your condo. That is $50 less that you have as disposable income. That means that's $50,000 less you could be spending on a mortgage. That $50,000 less on a mortgage simply means that if you're going to be purchasing a home, you're going to be purchasing a home with that smaller amount of a mortgage payment on it, which means a lower priced home. House price illusion on the way up works on the way down, as people in Vancouver and Toronto found out over the last couple of years, and as people are continue to find out in Alberta, Saskatchewan. House price illusion works on the way down as it works on the way up. The same way that housing prices are believed to be rising higher, they're believed to be dropping lower. Well, they really are increasing. They really are decreasing because people believe the illusion. If you take out, for the sake of the argument, let's go with $75. Let's say $75 a month. And your mortgage is 100,000 mortgage is carrying for around $480 a month right now. So $7,500 at four, what's that? 1.6. So that would technically be somewhere around $15,000 less that you could per $100,000. If you're going to spend $15,000 less, and all of the buyers in your category of homes similarly is forced to spend $15,000 less, the average selling price for that category of home will drop $15,000. People will believe there's a $15,000 drop in house prices, when really it's just that the buyers are buying $15,000 cheaper homes initially. The next group of homes that comes into the market then believes that the housing prices have dropped, and they adjust their prices accordingly. This is why it took so long. Back in I believe it was the fall of 2016, on your show, we told everybody in Vancouver that we had already recorded a 28% house price correction then. That was proven true 2 years later. That's how long it takes listing inventory to drop in price. Where on the upside, the upswing, it happens almost monthly. On the downswing, it takes 3 to 6 months for the cycle to repeat itself again. So this is one of the things where we talk about how organized real estate stats are designed to be house inflationary, not deflationary. All of the metrics and the processes, the infrastructure, everything that works in a housing market is designed to get the highest price possible. And they're designed to prevent home prices from correcting to their sustainable level. And that's exactly what would be the answer to this question. Every single dollar that you do not have available to spend on a mortgage for whatever reason, higher insurance premiums on the condo, higher property taxes on the condo, carbon tax on the fuel used to heat the condo, building GST, HST added to your condo fee, mortgage interest. So not the mortgage principal repayment in a month, but the mortgage interest that you're being charged. Every single dollar that you do not have in spendable income to pay down the principal portion of a mortgage causes house prices to deflate. Now, whether that deflation happens rapidly, where people are seeing the prices deflate, or over the long haul, where inflation basically corrects a housing market, will depend on market to market, how big those changes are, how much less is available to pay down principal. Again, we only need to look. The best example in the country since 2013 has been Alberta, because every single dollar that came out of that province in terms of spendable income showed up in housing prices. And then you get the wealth effect, which starts to double down on what's taking place. I think you're going to see that in Vancouver this year. All of the house prices, all the housing wealth that has been lost over the last 3 years in Vancouver will probably come home to roost in the greater economy this year. This is probably also going to be true with the situation in China where housing wealth there is starting to turn negative because of the amount of vacant homes that supported their home value Ponzi scheme that was ongoing in China. So for this listener, the answer is very simple. Anything that takes $1 out of a homeowner's pocket means that's $1 less that they can carry in a mortgage, which means home buyers, that's $1 less that they can spend on a home, which your local real estate board will be reporting as $1 less in average selling price, or house prices dropped $1.
We'll have more with Ross Kay right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, Organized Real Estate has been claiming sales are lower than normal because the supply of homes on Realtor.ca are so low. How does this measurement of supply work?
Well, it doesn't work because, as anybody who's followed the housing market, every single time that the sales are down or sales are not rising, Organized Real Estate comes up with some excuse that sounds reasonable. I mean, it sounds reasonable when you hear someone say, "Oh, there's not as many homes for sale today, so since the supply is lower, there's not as many opportunities to buy." That makes sense. It sounds rational. I mean, it sounds rational for 40 years because Organized Real Estate says it. But then at the other turn, when there is lots of homes listed on Realtor.ca, that in turn is also blamed for a slowing housing market because they say there's too much inventory on Realtor.ca. And what I'll tell you, listeners, is this. The data says otherwise. The data says both statements are false. They're fraudulent statements. They're statements that as a real estate sales practitioner in the province of Ontario for 25 years, if I had ever said to a client, the provincial regulator would slap me down. Because when you're a high-profile, high-selling volume realtor in your local community, all of the low-fruit sales reps in the business are looking to take you down. And anything that you do, there is a complaint issued to it. When I was selling homes, Jim, we received complaints probably once a month. They would go to the provincial regulator, they would go to Korea, they would go to OREA, they would go to the local real estate board. And they would all be fictitious complaints looking to take us down. I mean, the Canadian Real Estate Association's legal team must have sent me 6 letters over the years, cease and desist. Now, we never ceased and desist what they were asking us to stop doing because what we were doing was 100% legal. It got so bad at times, we had to have lawyers review our marketing materials to make sure we had a legal defense when we wanted to put them out. The regulator in Ontario, back in the late 1980s, installed the first fax machine down at Queen's Park in Ontario so that we could fax our ads to him every week. Because he would get complaints, he would have to go through a process. The process would have to be us responding, and every single time we were right, and these complaints that were being issued were just simply jealous low-lying fruit realtors looking to take us down. So we went and purchased a fax. I think it was like $1,600. It was a staggering price at the time, Jim. And the registrar at the time agreed that he would get a fax machine in his office. We had a direct fax every single week. Our ads went to him, so he could approve them. So when someone else complained about the ads, he had already reviewed them and could say that he had already reviewed them. I mean, ironically, supposedly that's something they're trying to offer to realtors now here 30 years later. Every single thing you hear from organized real estate, whether it was last week's British Columbia Real Estate Association telling everybody that housing, the average price of a home had increased $60,000 in December, when not one of the 12 real estate boards reported a $60,000 or higher average increase in price. Sales listing counts. Listing counts have never measured supply. I can tell you, Jim, if there is one house for sale in the street, there are 5 other owners that are thinking of selling right now. As a confident realtor, I would never restrict my buyers to the one house that was listed. I would go find out which of their neighbors may be interested in selling. Supply was never an issue for us because we did the work. The industry doesn't do the work. The industry would never do what we did. If they did, they wouldn't be making these supply comments. What your listing count tells you on Realtor.ca is one thing and one thing alone. Do Canadian homeowners have confidence in the housing market enough that they are willing to trade up to a more expensive home? That is it. When you see a high number of listing counts on Realtor.ca, it's because in the early stages, so I'll have to qualify that. It means that the public, homeowners, have a high degree of belief that home prices are going to increase, and they want to move before the houses increase in value further. In other words, they want to move when their amount of mortgage that they're going to have to add is as small as possible. When they believe home prices are going to drop, they quit listing their homes. Because what homeowner in their right mind would want to trade up to a more expensive home when you believe the price of that home is going to drop? Why would you lock yourself into a 25, or if it's a trade-up home, let's say a 17-year mortgage, with at a higher price than if you just waited a few months, you would have a smaller mortgage amount to be paid? It doesn't make any sense. This is another issue, Jim, when we hear about, we've heard over the years where they're chastising Canadian homeowners as being imprudent, being irrational, being spendthrifts. My experience has been just the opposite. Homeowners always know, before you ever read it in a newspaper, what a housing market is doing. This is not like the stock market, where everybody in the neighborhood doesn't discuss what stocks they own. Everybody in a neighborhood talks real estate. They have for the last 30 years. I mean, maybe before that. I don't know. I can only speak to the last 30 years. Everywhere you go, every party, every family get-together, every meeting, people are talking about their houses, what the housing market is doing, and how well they've done or not done in the housing market. This has gone on over and over again. Clearly, as those conversations begin to change, you start to internalize what you feel about the housing market. And what the mass believes about a housing market becomes true. It becomes true with house price illusion, which the Bank of Canada has artificially determined is froth. It becomes true with stabilized, and it becomes true with falling home prices. Whatever the public believes is what's going to happen. It's got nothing to do, nothing, zero, with the realities of a housing market or house prices. It's got to do with the belief people have in the market. They always know well in advance what a housing market is going to be doing. The public knows, existing homeowners know whether home prices are rising or falling. Even if they're not talking about it at those family get-togethers, those meetings, those community events, or with their neighbors. They intrinsically know what's going on because it's their life. It's the roof that goes over your head. Where what's missing is home buyers. Home buyers need to understand that they need to capitalize on this reality of all housing markets. There is about 144,000 homes listed for sale on Realtor.ca as of 9 o'clock this morning. So we have taken listing counts off Realtor.ca since the first day Realtor.ca got launched. That doesn't mean that there's a low supply of homes. There's lots of homes to be purchased. I mean, last year alone, less than 50% of the homes that appeared on Realtor.ca ever sold. You didn't hear that reported anywhere in Canada, but this is a factual number. Less than half of the homes that were listed on Realtor.ca sold over the course of the entire year. Some months, it was as low as 10% sold. You never hear those numbers. You hear the fictitious sales to new listings ratio, which is a correlating metric, not a causational one. So, the answer to this question is very simple. They cannot support their statements with facts, and since they can't support this low supply is causing lower sales myth, that's why none of the local real estate brokerages are on the record saying it. Because in pretty much every province, if a brokerage is to make that statement, they become legally responsible for it. So, no, lower number of listings on Realtor.ca does not mean that there's constrained supply, that means it's going to be causing higher house prices. What it means is your selection of homes is drastically reduced because your real estate agents are too lazy to go and knock on doors for you. It's unfathomable to us in today's world that real estate agents are allowed to get away with this. If I had a real estate agent working for me, which is one of the strategies that we employ for our members, those real estate agents have to go knock on doors. If I'm interested, if I see a house on Realtor.ca, I want to know about the other 4 houses in the neighborhood that are going to be listed at some time this year to be able to make my selection process from. It's a lot of work. But you know something? When you pay tens of thousands of dollars for just being a simple real estate sales agent, someone who simply shows you houses, writes up a contract, which is boilerplate, which is actually on a computer, you don't even have to think about. You can actually put in their names, and then all of the blanks get filled in. Offers that are never taken to lawyers before the buyer is asked to sign it. Valuations on properties that are never proved with a comparative market analysis on the property being done before you're putting an offer in. That's why you've got the problem what you're having. There are lots of supply. There will be somewhere around 1 million homeowners in Canada that will have their homes listed for sale at some time this year. If you believe there's only 144,000 people homeowners in Canada who are going to sell their home to you this year, you're being sold a bag of goods by organized real estate. That bag of goods is to do one thing and one thing only. Get the highest price possible in the shortest period of time. Please, don't listen to shills and hucksters.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim, and I hope you're feeling better.
Oh, I'm sure I will until that new SARS thing gets to town.
Yeah. Close the airports. Close the airports.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. You can also find us on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.